lead off this part of the discussion, I'd like to ask this question. Is borrowing money from your 401k plan the way to go?
Okay, so borrowing money from your 401k is not ideal, but in situations like this, a worldwide pandemic, sometimes you need to do that, and that may very well be the case now. So through the CARES Act, there's some ways that you can gain access to your 401k that you didn't have before without penalty.
Right. So this versus like a personal loan or credit card debt is a better option because of the changes that they've made to like the rules around borrowing from your 401k or pulling money out of your 401k. So
right, absolutely.
So overall, so I guess the first part is like, can you take a distribution from your 401k plan if you've been affected by the coronavirus?
And the answer to that is yes. And there's basically two qualifiers or two sort of sections of qualifiers, and that breaks down by medical versus financial. So if you're in a 401k plan and you've been affected by the coronavirus, and what that means under the CARES Act is if you've been diagnosed with COVID-19, if you have a spouse or a dependent that's been diagnosed with COVID-19, then these 401k provisions apply to you. Also, if you've been impacted financially, so if you've been quarantined, furloughed, or laid off, if you've had reduced work hours, or if you've been unable to work due to lack of childcare, then these provisions apply to you. And quite honestly, and I know Matt will get to this, but just so you know, because we won't go back through that again, those qualifiers are the same, whether you take a distribution from your 401k or whether you take a loan from your 401k. But what is really important to understand about either of those two things is it's the CARES Act allows for it, but your individual employer still has some say over that plan and over what they're going to allow. So it would be important to check with HR and see exactly what they're allowing. I'm just telling you what the provisions will allow, but the final say is up to your individual human resource department.
So, and maybe just to clarify, in the pre-CARES Act, you have also been allowed to, well, if your plan allows for it, you've been able to take a loan or a distribution from your 401k.
Right.
What are the differences post CARES Act in terms of like tax implications, limits, and that sort of thing?
Okay, so under the CARES Act, you can take a maximum of $100,000 from your 401k, so $100,000 or less. You are not subject to the 20% withholding that normally occurs when you take a distribution from your 401k. Excuse me. There is no 10% penalty for an early distribution. So, excuse me, if you're under 59 and a half, you can still take money from your 401k and you will not get hit with that 10% penalty. And normally, if you take, just for round numbers, you make $50,000 a year, you take 20,000 out, normally that 20,000 becomes part of your income and you're taxed accordingly. With the CARES Act, what they say is you can take that distribution and that income it'll be rated over 3 years as far as income tax purposes.
Cool. And then in terms of repaying these distributions in the future, if you have the money, you can do that now, correct?
Mm-hmm. Exactly. So that is different as well. You can repay all or part of it anytime during the 3 years following the distribution.
Gotcha. All right. Well, I think that covers that. So If you have any questions on that, feel free to reach out, and Donna will be able to answer. As well as she mentioned, go to HR because they'll have the specific details. So I want to move forward to the differences or the financing options for small businesses and independent contractors. I fall into this category, so I know Donna and I have both had we've had long discussions about these options, what's out there and available to me as a small business owner. So one of the big differences, and the question is, can an independent contractor apply for unemployment now?
And the answer to that is yes. And I'm sure everybody on this webinar, through your email, through your inbox, through lots of different sources of information, you've heard, a lot of different things about what's out there. And what we're trying to do today is just break that down and make it, make it easy. So we went directly to what I'll call directly to the horse's mouth. We went right to the Maryland Department of Labor for this. So part of this I'm just going to read. So according to the Maryland Department of Labor, independent contractors, self-employed, gig workers, etc., who are not normally eligible are eligible under the CARES Act. These individuals are eligible for a maximum of 39 weeks of benefits, which includes a $600 federal pandemic unemployment compensation. The unemployment benefits are effective January 27th, 2020 through December 31st, 2020. The additional $600 is effective March 29th, 2020 through July 31st, 2020. And the $600, you may not see that immediately, but you will see that once the technical systems catch up and they're modified, and it will be automatically added if you qualify.
Right, so we were looking at the website yesterday, and there's a big statement in bold that says for independent contractors, self-employed gig workers to not, so yes, these are the new rules and regulations behind unemployment for those people. However, do not apply yet because the technical system doesn't support approving those people for unemployment. So if you apply, it's going to deny you, even though you might meet the criteria under the new CARES Act. So what we saw yesterday was that should open up tomorrow, but we won't know for sure until they actually see it. So they let you put your email address in, and you can, so they'll notify you exactly when that's going to open up to you. But yeah, this is something that's really interesting to me because typically you wouldn't be allowed to file for unemployment. This totally changes that.
Right, absolutely.
So what other loans are available to small business owners?
Okay, so I'm going to talk about a couple loans. There's different loans out there. There's loans through the CARES Act. There's loans through the Small Business Association or Small Business Administration. There's loans through the state of Maryland. I'm going to talk about the two main loans that we're hearing about, but please, if you have questions, feel free to give us a call. One of the things I think that Matt, Shayla, Kathy, Joss, and I have gotten somewhat adept at going through this process to get ready for this is knowing where to go to get the information, knowing which resources will tell us what we want to know. So before I get to the loan, I also want to tell you, if you are a small business owner or an independent contractor, they're through the economic injury disaster loan, or you'll see it a lot of times as EIDL. In addition to that loan, there's also a grant. So I want to tell you about that first, because that kind of goes along with don't go to your 401k, don't go to some of these other places until you've used these resources that are available. So with that, it's a $10,000 grant. There's certain provisions, and if you meet those, I think it has to be used for like mortgage, utilities, lease payment. But as long as you can prove at some point that you used it for that, it's a grant and it's forgiven. You don't have to pay it back. The maximum on that is $10,000, and you can apply for that through the Small Business Administration website. As far as loans, also with the EIDL, they are offering loans for small businesses. It's $2 million, the maximum amount's $2 million, and it's with an interest rate of 3.75. I'm not sure what the terms are. That's something I could find out, but some of them are fairly long. You have quite a while to pay those back, and I can get that information. But again, that is also through the Small Business Administration, and that's called EIDL, or the Economic Injury Disaster Loan. The second loan that you're hearing a lot about is the Paycheck Protection Program, the PPP. This is for small businesses who either have not laid off anyone or who would be hiring them back. It is, there's a formula, and we can provide you with that, but basically it's, you take your payroll for the year, and then you use 2019. So you take your payroll for 2019, and then so it's payroll, benefits, get a total on that, you deduct certain taxes, then you take that number, you divide it by 12, then you multiply it by 2.5, and that number is the number that they would consider you for a loan. Again, if you can show that you used it for payroll, mortgage, lease, utility, this loan would be forgiven for the employer. So that's just something else to consider. There's a lot of places to look for that. Obviously, Small Business Administration, I think we uploaded a piece from the U.S. Chamber of Commerce. If not, we have it, and that's very clear, and it shows the calculation for the loan, and yeah, that's fairly easy to that's fairly easy to fill out as well. So something else to consider.
All right, great. Well, I think that pretty much covers the three sections that we had we wanted to cover based on the questions that were coming in before this webinar, but we want to open it up to questions specifically to people who are on the call right now. I'm going to unmute everybody's microphone so you could chime in. If you do have a question, just unmute, click your microphone, and you can ask it. But I definitely wanted to, I know Donna thanked the rest of the Investment Watch team on the first call, but I had a lot of support from Shayla, Kathy, and Joss, who I know are on the call now as well, putting this all together and helping me figure out GoToWebinar and testing it. And so that's a big thank you. You guys made my job much easier. So any questions? All right, well, if nobody has any questions, Donna, do you have anything to add?
Yeah, just thank you for spending part of your afternoon, evening with us. If you have questions and we didn't cover it, or just something you want to know about, or a resource that you might be able to use, please feel free to reach out to us. Shayla and I are in the office every day. Joss and Kathy are also working. They're working from home, but we are available, so please reach out if we can help in any way. And thank you, a huge thank you to Matt for making this happen, to starting it off and to making it happen, and obviously to Joss, Kathy, and Shayla as well.
Well, you're welcome. And if we continue to get specific questions, and as things progress and change over the course of the next month or two, keep an eye out. Maybe we'll jump back on one of these calls to address certain things to get you guys the most current information. So thanks. So we're going to go ahead and, oh,